Here we're taking a look at Chapter 5 in our three categories: withdrawals, revenue, and expenses. So what I've done is I've taken them after explaining them in the last video and putting them in a T account, and this is how you're going to deal with them in the chapter. Now remember, to review, a debit is just on the left side and a credit is on the right side. So we got debit, credit, debit, credit, debit, credit. It does not mean anything good or bad. It just means left and right. That's it. Okay? So what we need to do is commit these things to memory. Where is the increase side or the normal balance side of these three accounts? And remember, in the inside cover of the back of your book, you will have right here the rules for debit and credit. Turn to the inside back cover of your book. I highly suggest that you get this out and use it so that you can help yourself commit these things to memory. Okay? So, what we've got here is on withdrawals, the increase side is a debit. Okay? The increase side is a debit. This will make sense later when we close this account and have to put it into the capital permanent account. Remember, these are temporary, and so they're designed with the feature of opening them each month and closing them back to zero at the end of the month. So the idea here is that withdrawals is on the debit side. The reason is for when we do our little switcheroo to put it back into the capital account, it's got to be on the debit side to start here so that it can move into capital. All right. So withdrawals, our normal side is the debit side, and that's where we increase it. Now you're thinking, how can you increase withdrawals? Shouldn't that be a negative? Well, yes, it is taking money out of the business, but it is measuring how much we take out of the business. So if I take out $2,000 this month, I don't put a negative. There are no negatives anymore. This left side over here, this debit under withdrawals, tells every accountant that the owner took $2,000 out. I increased the amount of withdrawals that I am making this month. And I did so by $2,000. All right? Let me say that again. If I have this $2,000 in this debit side, it means that I have increased the amount of withdrawals. Will that bring down the value of my business? Yes, by $2,000. But I don't have to put negatives there or anything like that. This debit side has increased the amount of money I am taking out. That's how that is thought. All right? So that's the language of numbers in accounting here. Now, can I ever have a number on the credit side? Well, that means I would be decreasing my withdrawals. So that gets a little confusing. And the answer is no. If I was to donate money to the business, like at the beginning, it would simply go into the capital account as a permanent, addition. And then if it's a decent business, almost no one adds money to it over time. You have to be losing money to give you the reason to do that. If you were making money, there'd be no reason to add more. Okay? So that's sort of a one-time thing at the beginning of the business. And usually that comes with some sort of memorandum that says, hey, we went broke last month, but I still want to keep my business going, so I added another $10,000 of my own personal dollars. Okay? And so that would go to the capital account. You wouldn't ever find it here. So for withdrawals on the credit side, you're never going to use it. It's just always a debit. Okay? All right. Going over here to revenue. Revenue, its normal balance side is a credit. I know, you've got it in your head that debits are good and credits are bad or something like that, but forget it. Toss it out the window. Debits are on the left and credits are on the right. And when you're dealing with revenue, you increase your revenue on the right. Okay? Because when we do our close to capital at the end, it's got to start here so it can move there, so it can move over, so it'll balance, okay? So you're just going to have to commit it to memory. The revenue account is on the credit side. And it should always be on the credit side. Money coming in, money coming in, money coming in. It's increasing, it's increasing. For me, I have one entry, rent. $1,200, let's say. put it out there, okay? So I would put that on the credit side over here, and that is my fees or rental or, performance of services, whatever you want to put it. But this is on the credit side, and that's where that increases. Can I ever have a decreasing revenue? That gets a little weird again. See, so I put a different color and sort of in parentheses. Like maybe if someone rented the house and they moved soon after and I had charged them for the full month, but they only lived there for 2 weeks, and I refunded some of that money because because they hadn't been there for the full month. I would put that over here. So it'd be that I received the money and then I refunded it. But that's really, really rare. And that kind of stuff almost never happens. And we'll deal with those kind of refund things in another chapter. All right? So pretty much always you're just going to have rental, revenues, fees, and it's going to be a credit. Back cover of the book, commit it to memory. All right? Next one we have expenses. Expenses are on the debit side. Okay? And you might have a lot of expenses. These are just some of the things I deal with. Advertising in some online page or newspaper or wherever might cost me $50 a month. Utilities, next one up here. If I'm paying garbage service, I'm going to pay that every so often. I might have some maintenance expenses and some repairs expenses. And every time I do that, I put those in the expense category. And that's always on the debit side. Now, again, could I ever have anything on the credit side? A negative expense? Because money coming in is a revenue. So you're almost always going to have credits over here for revenue and debits for expenses. That's just 99.9% of the time. Maybe if I went to Home Depot to repair something and it didn't work for $300, but I found another part that would work for $250 and they refunded me $50, I could put the $50 over here because I spent it and then got it refunded. But I'd write a little note to myself. It's called a memorandum. And so in the business world, anytime you do something very unusual, usually a little memorandum is attached to it. And if you're doing these kind of things on the computer, there'll be a little button down below that says M for memorandum. You click and a little box will pop up and you type into there, returned part for more than spent in the first place. Here's the refund, and you put it over there. So anytime there's something weird, we do what's called a memorandum. But most of the time, and what you're going to practice, is a withdrawal on the debit side, revenue on the credit side, expenses on the debit side. And that's chapter 5. It's not terribly complicated. It's just drilling into your mind these accounting concepts so that you can get going, and we can build that base so we can then expand out and get into the more complicated things. All right? So for chapter 5 here, this is where you're going to open up the book and practice. It's going to be pretty heavy on these 3 things, also with some of the things from chapter 4 that are going to be review, and we're going to work on those. I'll see you in class.